Good morning, Mr. Tan. I'm Lee Ling, metric number 304776, which is the group leader from Group 4. Today, we are going to present about financial statement analysis of IOI Corporation Berhad and YTL Hospitality Reit. This is our group member, which is Meshan, Lokayan, Vanessa, anak perempuan Lap, Nur Atira binti Roslan. First of all, let me introduce the two companies, which is IOI Corporation Berhad and YTL Hospitality Reit. IOI Corporation Berhad, also known as Industrial Oxygen Incorporated Sendirian Berhad, which created on 31st of October 1969. It is one of the Malaysian biggest conglomerates. Their original purpose was to venture into oil palm plantation, property development, and refineries. The second company is YTL Hospitality Reit. Their primary investment strategy is invest in a diversified real estate portfolio that produce income to provide the potential for long-term sustainable growth, mainly for retail, office, and hospitality real estate assets.
My name is Vanessa, anak perempuan Lap. My number metric is 304912. I want to present about main business for both company, which is IOI Corporation Berhad and YTL Hospitality Reit. IOI is one of Malaysia's biggest conglomerates. Plantation is one of the main business of IOI, which is engaged in the cultivations of oil palm and processing of plant oil with operation in seed breeding, cultivations, and crop oil extraction. The group global resource-based manufacturing business, comprising our refining oleochemical and specialty oils and fat summers, play an important role in fortifying their integrated plant value chain. The main business of YTL Hospitality Reit is investing. YTL Hospitality Reit investing in a diversified portfolio of income generating by hospitality assets. These assets primarily include hotel, resorts, and service apartments in Malaysia and internationally.
My name is Meshan. My metric number is 304816. I'm going to present the part of 3:1 liquidity ratio. Liquidity and efficiency refer to the availability resources to meet short-term cash requirement. It is affected by the timing cash flow, inflow and outflow, along with prospect for future performance. An analysis of liquidity is aimed at the company funding requirements. The ideal liquidity ratio to calculate and understand is the current ratio. The quick ratio is more stringent test of liquidity than the current ratio. In a sense, current liability are the denominator and current assets are the numerator, making them comparable. For the table below, we can compare the current ratio and quick ratio between the two companies of IOI Corporation Berhad and YTL Hospitality Reit. For the part for current ratio, IOI Corporation Berhad have 3.15% and YTL Hospitality Reit only have 0.2%. The current ratio of IOI Corporation Berhad bigger than YTL Hospitality Reit. IOI Corporation Berhad had more current asset than current liability compared to the YTL Hospitality Reit. IOI Corporation Berhad also have less risky and more easy to pay down the short-term liability compared to the YTL Hospitality Reit. For the part of quick ratio, IOI Corporation Berhad have 1.33% and YTL Hospitality Reit only have 0.12%. IOI Corporation Berhad is bigger than YTL Hospitality Reit. IOI Corporation Berhad can immediately eliminate its present liability. YTL Hospitality Reit facing financial problem in the short term to pay off its current liability.
Hi, my name is Lokayan. Number metric is 304908. I will present the 3.2 part activity ratio. Activity ratio is a financial metric that mentions how effectively a company uses its balance sheet asset to generate the revenue and cash. So in the ratio, activity ratio has two ratios. First is the total asset turnover. Second is the account receivable turnover. Total asset turnover is The ratio is indicate how efficiently a company is using its asset to generate the revenue. However, account receivable turnover is this ratio show the efficiency of company on collecting outstanding customer balances and managing the credit. Comparison for this both company in the activity ratio. First, total asset turnover. For 2023, IOI Corporate Berhad has an asset turnover ratio 0.45 times. At the same time, YTL Hospitality Reit has 0.10 times, which means these two companies has net sales lower than average total asset. Next, account receivable turnover. In 2023, the account receivable turnover of IOI Corporate Berhad and YTL Hospitality Reit is 3.71 times and 7.59 times. That means these both companies are not able to collect all their account receivable on time.
My name is Nur Atira binti Roslan. My metric card number is 303695. Next is about profitability ratio. Profitability ratio is measure ability of the management to generate adequate profit from the use of the firm's capital and assets. So the first one we calculate is about profit margin on sales. Investor and analysts typically use this ratio to gauge how efficiently a company manage and forecast future profitability based on the company operation forecast. For the formula for the profit margin on sales is net income divided by the net sales. Next, return on common shareholder equities. This ratio measures a company's profitability by revealing how much profit is generated with the money invested by the common shareholders. It also indicates the efficiency which a company is using the shareholders' equity to generate net income. For this ratio, the formula is net income minus preferred dividends divided by the average common shareholders' equity. In 2023, the profit margin on sales of the IOI Corporation Berhad is about 11.62%. Besides that, the profit margin on sale of the YTL Hospitality Reit is about 32.08%, which is higher than the profit margin on sales of the IOI Corporation Berhad. Generally, an ideal profit margin falls between the 10 to 20% based on the calculation. For both company had generated a good level of revenue and manage its expenses effectively. It also shows that the YTL Hospitality Reit and IOI Corporation Berhad had successfully built a customer loyalty and has an effective pricing strategy. Next is the return on shareholder equities. It's a financial ratio that measures how much profit a company generates for each ringgit Malaysia of their investment made by the common shareholders. Based on the calculation, we can see that YTL Hospitality Reit ratio is higher, which is 10.5%, while the IOI Corporation Berhad is only 1.41%. Generally, this ratio is important for investors because it shows how well a company is using its money to generate profit and how efficiently it's reinvesting capital. Therefore, the return of shareholders' equity for the YTL Hospitality Reit is better because their company have benefit from the stable income streams such as real estate investment.
3.4 Leverage ratio. This ratio shows whether debt or equity is used to fund a company assets and operations. Debt to asset ratio shows the total company asset funded with debt to the total asset of the company. Debt to asset ratio for IOI is 33 while YTL is 45. A ratio of more than 100 indicates the company has more liability than asset. In this instance, both companies are stable in their financial finance. IOI Corporation Berhad has a relatively low leverage ratio, probably to avoid any risk in its agricultural business, while YTL Hospitality used most of its funds through debt, possibly due to nature of capital-intensive business.
In leverage ratio, there are also debt to equity ratio, which is calculated with the total amount of debts divided by the total amount of shareholders' equity. These ratios measure how much debt a company is using to finance its assets relative to the value of shareholders' equity. According to the ratio, IOI Corporation Berhad had debt to equity ratio of 0.5 in 2023, while YTL Hospitality Reit has 0.8 debt to equity ratio, which is higher than IOI Corporation Berhad. However, a debt to equity ratio below 1 is considered as healthy because it reflects that the company has more equity than debt. Both company is mature and has accumulated a lot of money over the years. This means that the both company relies more on equity financing than debt. This is generally seen as a safer investment as the company is less burdened by debt repayment.
Now is suggestion for IOI Corporation Berhad. The total asset turnover have two suggestions. First is optimizing asset utilization and expanding market coverage sellers. IOI Corporation Berhad can increase existing productivity and invest in the production of plant varieties in the optimized asset utilization. And this also can increase revenue by exploring new market and target on the international market with growing the demand of the plant of all products. For the account receivable turnover, first is technical to communicate with the client, communicated with customer in the simple and clear language to ensure the customer understanding. However, the monitor account receivable regular. First is review payment received and update record. Also contact the payer to pay immediately or pay on the time.
Next is suggestion. Based on the profitability ratio, IOI Corporation Berhad have a lower ratio for profit margin on sales and return on shareholders' equity. The first point is can do builds a strong relationship with customer. By building strong relationship with customer is a strategic approach to increasing loyalty, fostering repeat business, and increase revenue while reducing the cost associated with acquiring new customer. Moreover, IOI Corporation Berhad is recognized as one of the largest palm oil producer in the world. Of course, it is easier to build a good relationship with customer because the palm oil is an important raw material in various industries. On the other hand, IOI Corporation Berhad can improve their return on shareholders' equity by increase the company's profit rate by investing in the place that give higher returns. For instance, don't put all your eggs in one basket. This proverb explains that investment should be made by diversified income stream such as explore new market, product or businesses opportunity to generate additional income. To sum up, shareholder more prefer company with the higher return on shareholders' equity because it more indicate that the company can make better decision with the cash and asset it possesses.
For the part of current ratio, YTL Hospitality Rent only have 0.2%. We suggest that YTL Hospitality Rent can optimize inventory management by maintaining sufficient stock to mitigate the threat of stock up. YTL Hospitality Rent can set appropriate reorder point for each product by considering elements such as time requirement for delivery, demand variability, and the desired service standard. YTL Hospitality Rent also can build out a suitable amount of inventory for its top-selling product to increase its inventory level and meet customer demand to earn revenue, which will boost the company current ratio up. For the part of quick ratio, YTL Hospitality Rent only had 0.12%. We suggest that YTL Hospitality Rent can trim unnecessary expedition to prevent high debt. First, YTL Hospitality Rent can cut off expense like SMC's physical marketing campaign that include expensive rent for event space, non-essential sponsorship, and costs for logistics and transportation. These expenses will not generate revenue directly to the company but will decrease the liquidity asset. Second, we also suggest that YTL Hospitality Reit can implement marketing strategy online rather than through physical. YTL Hospitality Reit can promote products through various online platforms such as Facebook and Instagram. It can also attack and reach a wider customer base, contributing to an increase in sales and revenue.
Okay, so turn to the next suggestion for YTL Hospital Reit of total asset turnover. First, the increased revenue stream. YTL Hospital Reit can offer additional services such as food and beverage packages, spa facility, and more to increase the revenue. Then, they also can offer promotion and discounts to attract more customers during off-peak hour. Next, suggestion for YTL Hospital Reit of account receivable turnover. So, YTL Hospitality Reit can improve their payment collection strategy. First, they can use email or SMS to contact and send regularly payment reminders to customers. They also can offer a variety of payment options or platforms for customers to pay. Last, they also can follow up with customers who have overdue payment.
Suggestion debt to asset ratio for YTL Hospitality Reit. Examining the debt to asset ratio, YTL Hospitality Reit recorded a percentage of 45%, which is relatively high and could raise concern regarding the company's financial health and stability. From our point of view, we propose that YTL Hospitality Reit should concentrate on improving operational efficiency and profitability. First, giving priority to customer centricity. Next, provide effective customer service to cultivate a positive customer experience, building trust and fostering loyalty. Booster the company ability, gather and evaluate customer feedback about their needs and desire. Last is increase customer satisfaction and encourage them to become repeat customer.
Last but not least, for debt to equity ratio, YTL Hospitality Reit state a ratio of 0.8, which have a higher risk in financing its growth with debt. In order to prevent this risk in future and maintain in a healthy state, YTL Hospitality Reit is suggested to reduce their total debt through debt restructuring. YTL could negotiate with suppliers or creditors to modify the terms of existing debt agreements, including expanding the payment period, offering discounts, or lowering the interest rate. YTL can construct a clear financial plan about future objectives to enhance the trustworthiness of investors. The financial plan should outline how company will use the credit wisely to manage expenses and gain revenue. Therefore, investors have more understanding in company's overall direction. That's all for us. Thank you.